Now let's do the refresher course on quantitative easing and what they're now switching to called quantitative tightening. So what is quantitative easing? Money printing, a lot of different words. But how does it work? What the Federal Reserve does is they go into the banking industry, into the pension industry, into the capital markets, insurance companies, and buy treasuries and mortgage-backed securities off their balance sheet, puts them on the Fed's balance sheet, and sends back cash. And again, what do all these institutions do with that cash? They don't sit on it and just earn nothing. They invest in the equity markets, they start lending it, they start buying bonds, and that money moves through the system. Well, what is quantitative tightening? It's just the opposite side of the coin. Instead, the Fed sells mortgage backs or treasuries or just lets them roll off and sucks cash back off the balance sheets of these companies, which will drive down asset values. I will say to you, well, rising interest rates have a bigger impact in the real economy. The Fed's balance sheet and quantitative easing or quantitative tightening has an equal, if not bigger, impact to asset values. So if you're watching what's going on with your equities or real estate or whatever, you got to stay focused on what the Fed's doing with their balance sheet. That's why you hear all the people on CNBC and all that, or Bloomberg, always talking. What is the Fed doing? Is the Fed going to pivot and all the rest? Because it has such an influence on asset values. And now we can see what's happening with the Fed's balance sheet. You see at the very end that red and that blue are starting to dip down. So what the Fed did is in May, they said they'd start shrinking their balance sheet by $47.5 billion through the summer months, and then start increasing the shrinkage of their balance sheet by $95 billion a month. And so if they continued that through the rest of the year, they'd suck $523 billion out of the system this year, and they'd suck another $1.1 trillion out next year, taking money out of the system.